Hi, I'm Jeff Hirsch. I'm here at the Traders Expo in New York with Zac Mannes, the Elliott Wave trader. He's the lead analyst of stock waves, and there's a mining stock component, and you're seeing an opportunity in gold here, but your bottom-up analysis is telling you which stocks to look at here in the gold area.
So we see a good, strong mix between a lot of the big names in the sector, but we also like to look at a lot of the Canadians and the Australians and a lot of the smaller caps, which we feel are really strongly underrepresented, even in GDXJ, that's supposed to be a juniors ETF. Right. Some of the main components and a big chunk of that is made up by the same components that are in the GDX, and even GDX itself is a component of GDXJ.
That's interesting. So what was the signal, the sign that you saw, that you're seeing here in your analysis for this opportunity you're seeing here in these gold mining stocks?
So we follow Elliott Wave Analysis, and one of the things that we like to look at is confirmation at all of the different subwave degrees. So in the late fall, we were seeing potential for one more low if we held under a certain resistance level, and we were able to consolidate and then break over that. And so now we're forming the first signs of the start of a much larger degree move. So
you're looking at the longer term wave and the shorter term wave at the same time. And what are the gold stocks? There's a few of them that have really jumped out at you recently that you like.
Barrick, probably, even though Newmont has outpaced it as far as market cap, I still think Barrick is the leading indicator in that whole sector. It's not the one that we pick that we think is going to move the most, but it certainly is like Boeing.
Do tell which one you think is going to move the most.
A lot of the smaller ones have some pretty tremendous potential.
You mentioned IM Gold before.
IAG has a very, very strong looking chart. It's kind of in the middle as far as market cap. Is at the tail end of the big guys, but leads a lot of the smaller names.
Now there's a little copper seasonality that we're trading in our service, looking at Southern Copper, which you said you didn't care for that much right here.
Right.
But Freeport you did like.
Freeport we like a lot. Both in the shorter term we feel it can get a little bit higher before it needs to consolidate some, but longer term it has a multiple degrees of nested setups that we look for that could be a very explosive move.
Now is it just the Elliott Wave Analysis that's having you prefer Freeport over Southern Copper, or is there something else that's
no, it's not just Elliott Wave, it's other technicals that we look at as
but not a fundamental, not a story, but all the technicals that you're seeing a more attractive technical picture in Freeport.
I had an opportunity a few years ago to go visit some of the geologists out in Nevada, so I really like the Nevada names. There's no political risk. A lot of the big A's are playing out there, and they have really low all-in sustaining costs, which I think, I don't look at fundamentals so much, but there is a component to the value of gold, all-in sustaining costs of producing that, and what their profit margins are. So at a certain level, that all goes out the window when gold's over a certain price. Then everyone's making money hand over fist, so nobody really cares about the exact margin.
So Freeport's got a little tighter, fundamental picture.
Yeah, I think so.
Excellent. Thanks very much, everyone.
Thank you.